Good morning. Welcome to the Transformation in Banking webinar. My name is Antonio. I work for GFT Technologies based in Singapore. I'm responsible for the banking practice, and I'm delighted to be here. I like to introduce my co-host who are joining me to this panel today. First, Turain Toon. Turain works for Google. He runs financial service initiatives out of Singapore for Southeast Asia. So welcome, Turain. Thank you for being here today. And it's also my pleasure to introduce you to Tom Bentley. Tom has recently joined Vodeno as the Chief Commercial Officer. He's joining us out of London, so 8 hours behind. Thank you, Tom, for making the effort of being with us today. And I'm very pleased to have you both. There have been many webinars. Every week there are webinars, discussion, roundtables about banking transformation. It is a hot topic. And today we want to do something different. It is not about trying to self-promote ourselves here, but rather with a combined experience from Vodeno and Google, share with you our experiences and insights on what we see in the market, what we are, the transformation that is going on through the projects we're involved. We want to share those experiences very openly. We want to answer your questions, and we would like this session to be engaged. How do we see transformation? It is very often we talk about digital transformation. I think the pandemic has put us even more focus on the digitalization, but it's more than this. From my perspective, transformation in banking is about, getting ready to meet the client requirements, to meet the regulatory requirements, to meet the financial goals, to change the way we do business. Yes, the rising of neobanks, virtual banks in Asia is putting pressure on banks management today to transform, to change. And I believe this is a great opportunity, especially in this market, to talk about those challenges that you are facing, the banks are facing, and how the future of financial services will be defined. So I would like to start, asking a question to Turain. So Turain, you work for Google. Obviously, you have a very unique perspective on what is going on, not only Southeast Asia, but on a global basis. Can you share with us, through your client engagements, what do you see? How do they see transformation? And what are the challenges they are confronted?
Thank you, Antonio. Yes, I think in my capacity here at Google, I have the pleasure of speaking to a lot of customers every week, and the topic of transformation comes up every single week and every single day, pretty much without fail. And what do we see as challenges? The good thing is the challenges are pretty much the same for everyone. Data is a huge challenge, and customers are always asking, how can I transform my data? The data I have inside my premises, the data that's around the customers and in social as well as other third-party sources. How do I bring that data together, create actionable insights, do that in real time, automate that, and do that digitally so that I can be more relevant to my customers? And that's a common theme. Hyper-personalization is probably the one theme that I have a conversation on every single week. Added to that, there's other technology components. How can I use AI? How can I use machine learning? What are all the cool new tools that we have at Google that we can bring to you to help create that hyper-personalization, help understand my customers more, help understand the consumer's behavior more, and what we can do to support that, and become part of the ecosystem of their financial service needs. And to that, we provide a lot of capability within Google, but that's only part of it. Part of the story is the technology. The other part is knowing what to do with the data, and also how to modernize systems and applications so that that data can be harnessed and used appropriately. And to that end, Tom, you've been in the core banking system business for a long time. What is the importance of a new core banking system in the transformation journey and its challenges?
Thank you, Farane. Apologies, as this year has learned, getting used to the unmute button is a skill we're all having to learn to deal with very fast. I was just saying it's such a pleasure to be on the panel with you today, and I have such memories of being in Singapore, where I was for a year, working with some of the biggest brands there, with an existing partner back in the day. I mean, to me, that is the fundamental question, right? And I think if you look at the generational journey of core banking systems, it's been an interesting process to watch over the last 10 years. And I like to think of it as a 4D journey. So if you start with one-dimensional, core banking systems, they were very focused on one particular business line. They were focused on one particular area or geography. And of course, the bank would sit that on the mainframe, sat within a large ecosystem within the bank itself. And then you sort of evolve to the second generation, or 2D, as I like to call it, whereby, vendors were able to offer different components. So be able to, sort of manage different products under that one vertical. But again, the bank was responsible for the run. It set up teams, it set up large development houses, which for me really drove that cost to income story, which of course has been a big factor if you look at the way the digital players are able to maneuver. And then you start to get into kind of where we are today, right, which is the 3D, the third dimension. And that's very much a great ecosystem of really fantastic core banking providers who, either are seen as SaaS-based, where you can move very quickly, speedboat from the cruise ship example, all the way to more cloud native platforms where you can directly access the code. However, the challenge with those platforms is that you still need to build ecosystems of components around them. The buzzword at the moment is composable architectures. But essentially, some of the difficulty with that, of course, is that you can use fantastic partners like GFT and so forth to kind of build all that together. But there is some complexity, right? If you're a new entrant and you don't have that experience or trying to manage that all under one SLA. So I like to think of the next generation as 4D. And this is where you start to really capitalize on the relationship with Google that we have in terms of data insights. You start to look at the wider complexity that comes into the market. And for us, it's not just about the core banking technology, right? Having access to the products and be able to code those is fundamental in terms of that development journey. But it's also the wider story in terms of the compliance, the operational efficiency. How do you manage all of the ecosystem of the bank going forward? And that's where I think it's all about that fourth dimension, right? It's seeing beyond just the technology, just the data, just the core banking. It's about seeing that wider ecosystem. And that's where, we've delivered some fantastic, efficiency on this process with, of course, our partnership with Google, but also looking at partners who are looking further ahead, like GFT. It's quite exciting to bring that ecosystem together. But I think, just to come back on this point, Antonio, I mean, from your perspective, I spoke about that mainframe journey all the way to sort of SaaS, this 4D. What would you recommend that banks sort of start with if they were to look at a project today? Antonio, I think you're on mute.
As you said, we need to learn. The complexity of a transformation is often underestimated. Yeah, I mean, everything starts with either a vision or a need. Yeah, if I take today the neobanks bringing this very hyper personalized user experience, very lightweight apps with a full banking experience, then the current incumbents are defining that vision. How do we compete? How do we enter or remain in this market? Yeah. So the first thing to do from my perspective is to align that vision between the business and technology. Technology can do many things today, but they have to follow that business vision. Yeah, and there's very often a misalignment. The second aspect is the business case. We tend to think big, let's be a big transformation, and we come across with this major targets. We're going to double our client base. We're going to increase the revenue by 2. So there is this major business ambition, And often, these business cases are above and beyond expectations. But the realization of those business cases is very, very difficult. So what we have seen is, a business case and a common vision that is shared by business and technology, and build up this journey on small steps, saying, let's focus on A, B, or C. Let's achieve this first. Let's try to keep our client base before we actually increase the client base. There is a big risk of exodus from the current incumbents into the new banks, because the experience is completely different. And in addition, they have this business offering of how we call freemium, right? So you get a lot of the things you pay today to your current bank, you are getting them for free. Yeah. There is a catch, sooner or later there will be some kind of fees that you will have to pay. But if you compare the fees just on payments or on credit cards, it's a big difference between the new offering and the current offering. So that for me is the two elements that when you start the transformation is really get realistic with the business case and get realistic with what you want to achieve, and bring technology together to achieve that vision and define a path of transformation that is achievable. Yeah, I mean, we tend to be over ambitious on this. Maybe Turen, you can give us some examples. I mean, you are dealing with tier 2, tier 3 banks, right? I mean, the tier 1, we know they have the funding, they have the people, they often have the technology, and they are facing this transformation, I would say, in a more relaxed way, because they know they have the capabilities. But when we go beyond that, tier 2s and tier 3, which is the majority of banks, right, in Southeast Asia, how are they actually facing this? I mean, when you don't have the investment power or even the resource to address or to face this transformation, how do you see this, and what do you think they should do to actually get there?
Thanks, Antonio. Look, and I think with the smaller banks with more limited budgets, this is where the beauty of SaaS and cloud come into very much the play. It enables them to benefit from a pre-packaged, and I like to use the word prefabricated house that you can put on top of your existing bank and give that digital front end. There isn't a huge amount of work then or heavy lifting to be done, because it's coming to you delivered and on a pay-as-you-go model. And with that more lower budget pay-as-you-go model, it really helps them harness the new technology, compete with the larger banks, but also have a more stringent IT capability, and they don't end up having lots of legacy. So what we're trying to look at is to prefab and take over the legacy with the new core, with new data capabilities, analytical capabilities, and obviously a great UX and front end. And I think there's a lot to be said for the focus on the human-centric piece on the front end, and how quickly you can change the perception of customers by having a great UX. And that therefore will just allow them to grow their own customer base through word of mouth, through marketing channels as well. But people will start to see that this particular bank is then easy to use, and people can access their money. I mean, the way I look at it is there's 3 interaction types. There's do it yourself, do it together, and do it for me. And the more you can get to do it yourself, obviously that has a huge ramification on your cost base. The back-end processes are not, people are not required as much. And you start to see some positives, not just from a customer experience, but also from the bottom line revenue. And the more you are...
Sorry, Fran, please continue.
Sorry, I was saying the more you are DIY-able, the better that customer experience is. Sorry, Tom, go ahead, please.
No, I was just keen to jump in, because I could not agree more. And I always, whenever I'm, talking to banking executives going on this journey, there's kind of 2 key principles that I try to distill. One is drawing the line, I call it, which is, what do you want to own as an organization going forward? And what are you willing to kind of trade off that someone else can run? And for some organizations, drawing that line is rare. So for larger banks, as Antonio mentioned, they've got the capital power, they've got the resources, and therefore, being hands-on the development, hands-on the compliance, hands-on the regulation makes absolute sense. However, for some new nimble challenges, being able to accept a process or a service from a vendor makes complete sense. The second principle that I'd align to that is obviously a true cost per account. So, I think the industry, there's lots of great fintechs you can go to. There's lots of great software houses, transforming themselves into unicorns and building that scale. I think the problem is, though, that a lot of, technologists and whatnot, although we build the architecture, we don't look at the true cost in terms of the operational efficiency. How are you going to run all of these different partners under one SLA? And for me, that's where you see the delays. That's where you see some of the issues arise when banks start, because ultimately, the more hands-on you are with that tech, the better operational efficiency that you have to have in-house. And I think it's fundamental for any new challenger, and they go hand in hand, right? Drawing the line on what you will own. And to your point, I think any entity should own its customer. But in terms of what parts of the customer journey you should own, a fundamental question that has to be asked up front.
But here, Tom, you brought an interesting point. We know already, Terrain just mentioned pay as you use, you just pay for what you need. Now, behind what you just said comes a complete new concept, let's say, at least of what I've seen in Southeast Asia, is the banking as a service. Instead of building everything on your own, can you actually transform by using services from third parties, but full services end to end, right? So you bring a new experience to the clients, you scale, you decrease the cost, you don't own it, you just use it. What's your view on banking as a service as an alternative to, let's say, organic transformation?
To be honest with you, I just think it's the future, and hence I, joined Vodeno in January, because I think, if you look at the sort of transformation that's occurring across the industry, it's not just about banks, right? It's about every entity providing embedded finance. So to give it some context, if I'm an insurance firm, to give an example, my car breaks down, I need access to credit, I'm 5 days away from, getting paid, I'd have to go, traditionally to other types of lenders with very high interest rates. Can't that relationship be direct and with the brands that I love? Ultimately, though, to offer financial services, banks need to be regulated in the same way that entities who offer financial services have to be regulated. And I think it's very easy for technology firms to provision really great tech. The sort of challenging aspect of that is, being a bank comes a load, which it should do, by the way, a load of compliance, a lot of regulation, and obviously ensuring that, we make the right decisions, whether that be for lending or the onboarding of a customer from a KYC or AML process. In terms of the context of existing banks, I think the banks that are thinking ahead, and you're seeing this with obviously banks in the UK, such as Startling and others, opening their services. For us, our partner in Ion Bank, who, to the point around subscription services, has a quite unique model around that front, but is able, in partnership with us, to offer quite distinguished, as I said, to all entities. It really drives, for me, a better cost to income ratio. And when you look at sort of the unit economics as you scale, again, if there are services that you may want to bring in-house as you grow, the fact that you've got that microservice-driven architecture, which we've built completely with our friends at Google, allows you to swap out the components that you want to own over time. I mean, I think another key issue to focus on, and I think this is where banking as a service has a real win in the digital transformation space, is legacy lock-in, is what I call it. Whereby, you sort of build this amazing architecture, but then you're stuck on it. So then if you want to make changes as partners change, new companies are adopted, you need to look at different data sets or different products, you're able to swap those around, right? And this is fundamental as a principle, that not only you have the flexibility with, of course, in your contractual arrangements to do that, but also from an architecture principle that you build yourselves in a way with a partner that can give you that fourth dimension, i.e. the servicing, the capability, but also the opportunity to explore those new partnerships as your business evolves.
So,
Yeah.
Turain, on the back of Tom, so he talked about banking as a service, but that requires a mindset change. The fact that you don't own anything anymore. I mean, you're well placed from a Google perspective because you come with an alternative to infrastructure, to technology as a service, platform as a service. But how do you see the organizational challenge or the organizational transformations that bank need to go through, to go saying, okay, I'm giving up, I'm going to SaaS, I'm giving up, I'm taking a service, a banking as a service. Yeah. What is required for banks to go down that road?
Look, I think there's a few interesting pieces here, right? And I couldn't agree more, Tom, that banking as a service definitely is the future. Interestingly, though, about owning the customer, that's an interesting proposition, because as we go down the banking as a service route, there are going to be your customers that you own, but you're going to provide services to an ecosystem, and that ecosystem will own those customers, and you might not even know who they are, but you will still be obviously providing a service to them, especially in the lending space, in the buy now, pay later space, and other unsecured credit. That becomes quite an important mindset shift. And I think that's a huge mindset shift, is that when we go into an ecosystem play, there are pieces that that you will do and provide as a service, and there are pieces that you will consume as a service, and everyone has to be quite unhappy with the fact that they won't own and control everything. And I think what we do see now, and traditionally in all the banks that I've worked with, and I'm sure yourself, Tom, the span of control has been in totality. And now we're sort of disseminating that span of control into the ecosystem, into partners. And now partnership has become even more important than ever for banks to move to the next level of digitization. And I noticed there's a question.
It's my favorite topic at the moment, because I think it's the whole question of what will a bank be in the future? Will the term bank even exist? I'm a great believer in banks. Why? Because banks have ultimately the customer trust. Even if you look at the new neos emerging, you see that people aren't switching to use them as their main account. It's more a holiday account, or they're using it for the access to crypto and other assets, for example. So there's still an absolute opportunity for the incumbents, I think, to gather that trust. And I think, to your point, whether we know what the customer is or what they're doing, there's always an element of KYC when you start to look further into those financial products. For us, it's fundamental from a licensing perspective that there is a regulator, and that we do everything to ensure that compliance is met. And this is why I think it's a really, really interesting balance, right, between these new challenges versus the regulators in terms of how that balance is driven. But just to bring it back to technology for 1 second, for us, this is where you start to leapfrog the difference between institutions who are visiting the cloud or on the journey to migrating to cloud from legacy versus being born in the cloud. And the difference is fundamental, right? Because the problem is that if you're built on legacy credentials, you can see it in the cost of actually moving or putting assets, onto data centers or whatever. There's a stickiness in the technology that is very difficult to untangle from. If you look at sort of newer propositions like Vodeno, whereby we're using all the best of the Google infrastructure to move fast, to scale, to offer that cost point. In terms of then building a marketplace, you're able to open yourself up in a really unique way. And for us, it's about also that API management, right? You can have APIs. Are they really RESTful? These are the sort of questions that, any entity, whether they're a bank or a merchant, e-commerce platform, they should be asking their providers to ensure they're getting that fluidity of their architecture for the future.
So on this point, you talk about cost, yeah? And I think this is, at least for some of the incumbents, transforming into the new setup of digital banking while managing the legacy. I'm talking about mainly the banks who have a mainframe, right? We know the costs in mainframe are quite high. They are needed from a scale perspective. Today, we know cloud can absorb that scale and that all those volumes and processing, it's possible. But nevertheless, the cost factor of managing the legacy and transforming simultaneously is quite big, right? So maybe the same question for each of you from a Google perspective, how do you help clients to overcome the challenge of transforming into the future while managing the legacy? And then Tom, you can see your view from a platform perspective.
Thanks, Antonio. Look, there's two approaches to transforming the legacy. The initial simple approach is to do a lift and shift, where you can strip out some of the initial costs by going into a cloud scenario and paying for what you use. You have the capacity to burst if you need, you have the capacity to expand rapidly for your data needs, and you're paying on a per compute hour clock. So that's one quick way of doing it, but that only solves part of the problem. The real problem isn't really being tackled, which is then to migrate that legacy out of those legacy applications into cloud native applications. And one of the great things in Google very much is an open ecosystem, open cloud viewpoint, is that once you go into a cloud, you shouldn't be locked in. It shouldn't be the equivalent of a legacy lock-in again. It should actually open the keys for you to run your system on your cloud of choice, or run multiple parts of your business in the different clouds based on the capabilities they offer, or the regions that they offer based on regulatory needs and requirements. And I think that's where modernizing the actual application stack also becomes important. And I'm going to hand over to you, Tom, because I know that's critical in how Vodeno works, so that you can be a very modern architecture and be agnostic on the cloud side.
Sure, yeah. I mean, I just want to touch on one thing really quickly. You know, I think as an industry, we've sort of honed in on the word legacy and obviously kind of position that as a negative thing. You know, it's the same way when you call secondhand clothes vintage, right? And there's streets in London based on that principle. I think parts of a legacy architecture are vintage, and they're vintage for a reason, and that they can be used. So for me, you know, if banks, on the banking context, if they're looking at transformation, you don't necessarily have to get rid of all that vintage architecture. There are components and pieces, for example, when you look at localization, that you should absolutely utilize, or there's experience within the bank, and I'm sure we'll come on to the cultural point, whereby you want to capitalize on that investment. I think the key thing for any organization, and this goes for banks and non-banks, is either working out where the future's going and what parts of your ecosystem don't cater for that, where you can stand up new propositions. From a Vodeno perspective, as I said, taking this 4D angle, we look at everything beyond just the technology. You know, we have smart contracts in order to have a sort of low code environment in terms of the way that we are able to capture that localization or the nuances of your products. We're also able to obviously replicate legacy products if you're looking to move those over. The key thing there is, how are you managing the code in that certification? Because ultimately the last thing you want to do is replicate the legacy that you had before. I think the second point of that, obviously, then is looking at the wider piece. And again, going to come back to this drawing the line principle. Where Vodeno differs is that we actually integrate partners into our solution. So as part of the Vodeno stack, we have around 80 third parties, which includes, you know, your traditional schemes like MasterCard, Swift, other partners that you expect in order just to do transfer of payments, all the way to newer fintechs like Tink, Form3, and others who help us capitalize on that investment. Because again, it's really around, how do you take the friction out of those processes? And ultimately, some banks will want to do those customer journeys or their operational journeys in a very different way. And that's where it makes sense potentially to go and buy, you know, all these different partners and stitch them together yourselves. We believe for the majority of tier 3-4 banks, and also, you know, tier 1 banks who want to move quickly, taking a service as a whole and allowing, you know, organizations like Vodeno to run those services for you provides not only a faster pace of transformation, but also less risk-free, in that, you know, this is proven, right? We've been running a bank for 13 months now on this principle. So for us, the model absolutely works. It's about understanding where the trade-offs are in that overall architecture.
You mentioned partnership before. So you said there are 3 ways to look into this. One is I'll do it myself. One, I partner with somebody, or I ask somebody to do it for me. Yeah. So before I want to share, GFT was part of the launch of MOX in Hong Kong. Yeah, and out of all the discussions with the CIO and our own experience, there was a cultural aspect in this transformation that was, quite relevant, I believe. The MOX experience, the CIO wanted to build a one team, yeah, and to get rid of this, he basically called everybody working then a Moxter. Yeah, so it doesn't matter where did you come from, you got labeled the same way. So people wouldn't make the difference, oh, these guys from GFT, these guys from X, Y, Z. So the idea of bringing that unique cultural, unique team working together was quite powerful, and I think it was part of the success of MOX Bank. Yeah, so we are seeing more and more in our engagements in the market that there is more openness to actually partner at the same level. It's not anymore, you do this for me. It's rather we do this together. I think that's the word you use. Yeah, and I think that part of doing this together, because they are complex problems to solve, right? So I wanna get your take on this one about. I mean, Google has this collaborative approach. I think in Vodeno you are doing the same thing. But what's your take about bringing this unique culture of change and working together rather than going into the old school that they work for me, I tell you what to do? Today is rather everybody's on the same level and we share a common vision. Turain?
Yeah, look, I think important that change in behavior and the collaboration and approach is very important. I mean, Google is a very collaborative environment, and how we approach problems, we look at every problem and think, how can we 10x the solution, right? So instead of looking at incremental change, we're looking for leapfrog change. And to do that, you can't do that on your own. You need to have multiple perspectives. It's where diversity comes in play with our teams. Our teams are all scattered around the world, and with that brings lots of viewpoints, and the diversity and collaboration together is how we do a 10x problem solving exercise. We can't do it any other way, and it's pure collaboration, and that's how Google works, and that's how we infuse that culture with our customers and partners to say, look, if we approach the problem together and we do it this way, look what we can achieve. And we do that very much with our partners and help support them in developing their applications with a Google platform to achieve those outstanding results.
Yeah, like just to echo that, I mean, we've had a fantastic partnership with Google, since the inception of the company in 2018. So we've been able to do some really smart things, leveraging as much as we can out of the technology. And for me, it's about bringing together, you see a lot of entities that are founded by technologists who don't really understand banking, or vice versa, the other way around, right? For us, it was about bringing that marriage between all the things that come with banking, the regulation, the compliance, pushing the boundaries, but not enough that it would, upset any regulatory environments. At the same time, for us, it's really around, making sure that we get the best out of the technology in those partnerships. I like this. I use this phrase with my team, which is, proactive or passive engagement. I think traditional industry has been passive in that, I sign my contract, I'm part of the project team. If this partner is delayed, well, it's on them, and you miss the dates. And, even in an agile framework, right? It's sort of who's responsible for what. And then I think this is where, in our collaboration with GFT, for example, some of the work that we've been doing together, proactively planning all of these different elements in terms of how each partner can help one another is really, really important. And again, just to stress it, from a Vodeno perspective, we took quite a large investment from Warburg Pincus at 420 million. And a lot of people said, what was that investment for? It has a number of facets, but one of the key facets was to bring this ecosystem, the 80 plus partners, work with them, embed them into the solution so that we look like one team up front, rather than the traditional view, I would say, which is, yes, we have an adapter. Oh, look at our marketplace. But how far are you going to actually reach the end state? And for me, that is the most powerful thing in terms of approaching digital transformation in the 21st century.
So on your last point, Tom, we said digital transformation. We start talking about digital transformation, let's say around 2013, 2015, we had the advent of cloud and everything else. It's been 5-6 years already since we start talking about it. Why do we still talk about it? What has not happened, or what should still happen in this journey?
For me, the problem is it's copy and paste transformation that's occurred. It's sort of fast followers. So, there's a lot of people I respect in industry who say the moment that you have a chief digital officer, you're not really digital, because your whole business is digital, right? From that context. So, I think it's really around the contextualization of what the future journeys for those customers are going to be, and this is why, coming back to banking as a service, being able to evolve quickly, and the banks that are really pushing the button, and there's some great Singaporean banks, I believe, doing that, not only in the space of retail, but in the space of wealth. If you look down in Australia, there's some really kind of unique propositions popping up that are looking at, things like super and retirement. There's so many different facets, right, which need digitalization. So I think the reason that we still talk about it is that there's a huge long way to go before we kind of reach that wider ecosystem. I also think from a banking perspective, digital means being open. It means being open 24/7. And I think it means being open, not only to the business you do directly with your customer, but also, we mentioned the partnerships, the sort of e-commerce plays that are happening. Shopify is knocking on the door. In Singapore and Malaysia, you've got the new licenses going to Grab and Razer and some very unique propositions. So I think the reason that we still talk about it is that, there's a facet of offering digital channels to your customers, but there's also the next wave of digital, which is coming in the gaming we do, the shopping we do, all the facets of life where FS will start to break in. But Farane, I'd be really interested to get your view from a Google perspective.
Yeah, look, I think as we continue down this path, for me, the transformation is going to be in multiple speeds, right? Some banks are going to have to transform much faster than other banks. The newer banks are by default transforming, and even some of the new neobanks are already in their next transformation, right? So they've had their so-called legacy. I like to vintage. I love your term there, vintage. but they've also realized that what was there 2013, 2014, now in 2021 needs a change and a mindset shift. So I think this pace of change will grow faster and faster. And that comes back then to being service enabled, open APIs, microservices, and having a new cloud native architecture so that you can keep pace with that change. The regulators, we know, will continue to change regulations, and they're going to come faster with tighter deadlines to meet those regulations. As more and more people become financially included, and especially in Southeast Asia, that growth of financial inclusion, there's going to be alternatives for KYC. Those are all going to be services that need to be consumed. They're not going to be things that everyone's going to build on their own individually. There will be a consensus. It might be through ASEAN as a consensus. This is what we will do for KYC in the ASEAN region. But as those consensuses come in, things will standardize, processes will standardize. The regulators will continue to push those boundaries as well. I think we're lucky here in Singapore. MAS is a real thought leader in the regulatory side and has a great mandate to help financial services across the region, not just within Singapore, but to promote financial inclusion as well. So yeah, go ahead, Tom.
No, sorry, I didn't mean to cut in. I think slight delay, but I just wanted to say, like, for me, absolutely. And that's why I think if you look at embedded banking, I couldn't agree more with the excitement around what we're seeing in APAC. And if you look at, I like to call it the evolution of learning in that, if you look at what's gone on in Australia and some of the lessons learned, and there's been some recent articles around, the unfortunate, Zinja story where they've had to sort of hand back the license, the sale of 86400. It's interesting to watch how the regulators and the banking ecosystems are learning from those experiences, right? I look at the Philippines and Vietnam as the next sort of hotbeds of innovation. And I don't, the cool thing, you know, I'm talking to Antonio and some of my network is, I don't think they're going to follow the traditional path. They're not going to go, we need to build another Monzo or Revolut, right? Which has sort of been the state of play. I think they're looking at, as you said, more that contextual loyalty ecosystem. They're also looking at the communities and what localization for those communities they can provide. I mean, one of the things that we look at from a Vodeno perspective is, you know, for example, the SME journey. Of course, you need access to capital, you need merchant financing, but what about the bookkeeping? What about the invoice creation? What about that whole ecosystem that sits alongside it? So for me, that's what I'm next excited about. I'm excited about the mashup culture that I think is coming to banking and digital transformation.
Here, it's there's a couple of questions. There's a good question. I'd like maybe Tom and then Terrain. So Mirage asks, what are the challenges and how to overcome them to be banking as a service when you're in a third world country with multiple banks having not the same process and the access to infrastructure or cloud is not the same? So how do you think, I mean, Terrain said something, the regulator of Singapore drives a lot of change across the region, right? It's helping fostering this collaboration. But in other regions, you know, what do you think are the challenges to move, let's say, non-developed countries into banking as a service?
Sure. I mean, to distill, you know, how these services are set up, you first need to work with the frame of a banking license. So of course, you either need to go and acquire one, or you need to work with an existing partner. And I think in, you know, third world countries, it really depends on, as you said, what the regulator is, what existing banking infrastructure is. I mean, our journey in terms of Ion Bank was that we acquired an existing Belgium license through Banco Monte de Pesci. And ironically, we actually transformed that entity into a neobank ecosystem, all fully based on Google within a 5-month period. So we've absolutely shown that it's possible. But I think in terms of, you know, countries that are maybe not as digitally sophisticated, I think there's a complete opportunity there, right, to learn from the past. So my strong advice would be to, you know, look at the banking infrastructure, take you know, the technology such as Vodeno and Google out there that will help you because of their experiences in this play, and focus on, you know, what are the key services or key initial clients who will help you shape that story. I think it's all well and good to create a banking as a service, but there needs to be a demand. And I think that demand really differs country to country based on, you know, what the community needs from a financial services perspective, but also what, as we said, the regulator framework will allow in terms of that provision of that service.
Yeah, and just to add to that, Tom, I think it's also using APIs to provide a service. So when you don't have a standardized set of processes between different institutions, you can force that through having open APIs and people can start consuming that. So there's an education perspective there, but there's also then setting up an API marketplace, if you like, and then those can be swapped. And just the act of doing that will start making people collaborate and say, okay, if I'm going to create APIs and open them out, this is how I'm going to do it. And there will be that collaboration that will come in, and that will start to produce some form of standardization quite early on. And I think the regulator definitely has a viewpoint there, and will put some parameters around what those APIs should look like and security around those. But that's kind of how I would see the approach in a third world country to start the journey.
Mm-hmm. Yeah, to your point, right? So we in GFT, we did have, we were lucky to be part of this transformation in Brazil, where we helped, you know, the central bank and the regulator to define the open APIs. And this touched 108 million people, yeah, in Brazil. 85% of the population suddenly start sharing data through the open banking API, and allows, you know, you know, a true transformation in the financial service landscape. Yeah, let's talk a bit. You know, we have a couple of minutes left before we get to other questions. Can you share what are the most common mistakes you have seen in these transformation journeys? I mean, Tom, you've been a while, right, in this business. You've seen it a lot, and as a Terrain, you have this unique perspective to see what works, what doesn't work. But what are those common mistakes that institutions made in when they try to transform?
Yeah, I mean, there's lots across a 10-year career, but I think it always comes down to two, right? I think one is very much cultural. I've seen banks treat vendors as vendors, not partners, and what that means is that essentially that you end up with this quite conflicting journey of how you interact with one another. It's probably the hardest thing. I mean, everyone's heard the phrase that, core banking is replacing, it's heart surgery on a moving train, sort of metaphor. But I think that from my point of view, having a good cultural rhythm up front and being very open on the challenges as you go, in your planning is really, really important. I mean, I remember seeing some project plans that didn't take into account holidays with critical go live dates. There's examples of, other partners who wouldn't deliver, and kind of the other vendors around the house sort of weren't, kind of taking a blind eye, well, we're doing our bit sort of attitude. So again, it comes back down to that cultural principle of being one team. I think the second thing, again, for me, it's true cost. The reason that I joined Vodeno is, I think, being able to weave in those different partners through the APIs, to Faraine's point around how important that is, being able to provide a true one cost, under the fact that, for example, we do payments, cards, treasury, FX, compliance, the list goes on, right? It's not just about the core banking, which is usually the most interesting subject when it comes to this topic. So getting a good view of all of the different partners up front, whether you choose to go and acquire all those different partners and have to string them together, or of course use a partner like Vodeno where all of that comes prepackaged, having a really good understanding of what your operational SLA, like what is the post-live view of your world, and how will you work with either the singular partner or all of those partners to deliver that transformation would really be my my advice. But Faraine, what do you think? You must have seen some mistakes in your time.
I don't want to use the word mistake, different approaches to the transformation. But I think you've hit on it. The biggest problem that I see is not partnering upfront properly and making sure that everybody is one team. You've got to lose your badges as you come in the door. You're not, you don't belong to Vodeno, or you don't belong to GFT or Google, you belong to the project. And I think that's the critical bit. Then everyone is part of one team. And that's all I could say. Then culturally, you see a massive shift in performance of that team because they are one team.
Yeah, definitely.
Yeah, it's interesting that, there are three technology companies here, and the first thing that comes up is culture, right? So it's not anymore about technology. It's about, how to best work together towards the same goals. I think there are very nice examples in the industry where when this was a big success, they're working together. Now the questions are open. We have 10 minutes left. There is a question here that we touched before, maybe for you, Terrain. Faisal said, can you shed some light on the role of the regulator in promoting digital transformation in banking? Is the transformation internal driven or market regulatory push?
Well, I think let's start with what's driving transformation. The market is driving transformation by default. And that's spurred on by aspects of the regulator, right? So the regulators are certainly in Asia and in Europe, we've seen releasing new licenses. So by releasing new banking licenses, by default, there is going to be a change in the market. The drivers in that market will change and disruptors will come into play. I think we've seen a number of different neobanks across Europe who have disrupted the market there. But interestingly, it's an opportunity for traditional banks to look at themselves and say, do I change or transform myself to compete, or do I position myself differently? And it will be a defining moment to think about where they need to reposition themselves as well to be able to compete. But ultimately, I do think that and we've seen Australia, lose two of the digital banks in recent times. I think there will be a consolidation. There will be a proliferation, and then after the proliferation, there will be a consolidation. And the consolidation, I think, is going to be now driven into partnerships. And I think what you'll see is different neobanks in different countries, and the consortiums behind them will start to collaborate even more and become even more of an ecosystem-based bank. And those partnerships then across region will start to come in play. And that therefore also has regulatory implications. And I think that's something that regulators will need to start looking at. How are we going to regulate a consortium of banks in different countries with different current regulations? So that'll be an interesting piece. So to answer your question, it's market driven, it's regulatory driven, but it's also a need internally to make sure that if you are an incumbent bank, to change to be competitive.
Can I add to that? I would also say it's a game of profitability. So we're seeing, at least here in the Europe, a huge focus on, the line now to profitability. And that's why you're seeing entities, start to try to charge for their services. The freemium model is starting to erode away. And for me, that's going to come down to two things, right? One is the cost to run. And of course, there's efficiencies you get on the cloud. But ultimately, you need to have that product differentiation. You need to create that stickiness that customers are going to ultimately move their services to you, which is one. And I think the second factor then is purely how do you differentiate yourself in a very crowded market? You mentioned Mox earlier, Antonio, who I think have done a fantastic job in marketing themselves and their lifestyle services, compared to, we mentioned other entities who unfortunately have disappeared. So I think you'll see this consolidation, but I think this game of profitability has become more and more important. And I think there's two angles to that. One, I think we'll see banks start to try and offer banking as a service sort of principles will start to open out their ecosystem. And I think on the other side, it'll be interesting to see what this next wave of neo disruptors, whether those are new brands or new product lines or new community focused vehicles that ultimately sit within the umbrella branches of the bank.
Yeah, I think this is, one, just to close up this on, if we combine with the previous question, the common mistakes. Acquiring new clients is very, very hard. Yeah, and I think there is, people underestimate the price and the effort to acquire new clients. And that's where the opportunity for incumbents comes in. They have a client base, the trust you mentioned before, right? There's an established trust. So transforming your own client base into new technologies, new offering, it might be, the right path. Neobanks will be challenged. I mean, Australia is an example. Yeah, it's the cost, the business cases are challenged. But using banking as a service, as a, let's say, as a spearing the change, offering new services without the burden of migration, right? Because that is the biggest question in core banking system, migrate the previous into the new ones. So there is a combination of factors here that are key to face these challenges, whether they are market-driven, internal-driven, regulatory-driven. Technology and products and services today offer many paths to transformation. And that could really help each of the current incumbent banks or the new banks to find their own transformation journey. Yeah, to say this is the challenge we have, and this is who can help us and how they can help us to actually go that way. Yeah. So another question from Faisal again: what will be the business edge for banks and financial services providers when the services are similar? I think it's part of the bank as a service. Everybody uses the bank as a service. What's the edge? I think Turain responded to this question at the very beginning. So I'll go back to Turain. What will differentiate the players in the market when the back-end services are the same?
Look, that comes down to the product that you're offering and the solution you're offering, right? So the more personalized it is for the customer, that will be the differentiation. Ultimately, the fees might be the same, the interest cost might be the same if it's a lending product, but if you're providing that in a more personable manner, at the right time, when the person is actually looking for that product, I think that's the differentiator. It's timing. You know, when's a good time for someone to buy a product? If you're just spamming them all day with SMSs or messaging about, you know, loan products or credit card products, they're going to switch off. But knowing when they need a product and being intuitive in that side, and that's where you need that full customer 360 view. Understand the ecosystem they play in, the ecosystem that they live in. And if you can be in that ecosystem and understand it at the right time, you can position the right product. I think you'll see the profitability coming, and that's the edge that you'll end up having. And if you're doing that consistently, those customers have very little reason to go elsewhere because they will feel that they are understood. And when people feel understood, they'll continue to stay with that product. No different to, you know, your employer. If you feel understood by your employer, you tend to stay there for a long time. When people sort of start to leave when they don't feel they're being understood anymore. And that's kind of the same analogy I have with banking.
So maybe to add here, and in Southeast Asia is quite remarkable, the super apps, right? So the lifestyle apps, when the offering is not just pure banking service, but a broader, you know, they can to every segment of your life. They offer the things you need, whether it's shopping, whether it's insurance, whether it's transportation, food delivery, banking services, credit, investment. I think this is what's going to differentiate the future. In the back end, when you make a payment, it doesn't really matter if the payment process is the same or not. At the end, it has to go from A to B. Yeah. But it's that experience that is brought to the client and saying, I don't need to have 20 apps or 5 bank accounts. If I go here, I can actually, you know, cover 80% of my needs, yeah, on a daily basis. There is one more question. We have 1 minute left. Is what are the training requirements or education requirements that the banking sector needs to help achieving this transformation? Tom?
Yeah, it's a very good question. I think, to be honest with you, it's all about talking to entities who've been there and got the t-shirt, you know, and I think most banks that I've spoken to are very open to have, you know, dialogue around what worked for them, what didn't. And coming back to the original point, you know, I think there's a lot of material out there in terms of how do you turn customers into fans. And what I mean by that is, you know, taking numbers off the balance sheet and actually looking at what aspects of the technology or your current journeys that people enjoy. I mean, we talk a lot about digital, but ironically, I was talking to a bank yesterday who, you know, a large majority of their customers, because they're affluent, prefer to sit down with someone. They appreciate contextual advice. They appreciate being able to speak to someone on the phone. So bringing that all together, you know, I think from an education point of view, being able to go and talk to people and understand where you get those experiences, where you get those learnings from. And of course, you know, there's a fantastic partner community out there to go and get those learnings from. So I would advise any bank to go and have the conversations with Google, go have a conversation with GFT, talk to the you know, vendors like Vodeno, because ultimately, you know, as hopefully it's come across today, we've all got the scars, and they're very good scars. You know, learning is a process, but hopefully we can help everyone who's beginning these journeys make the right choices up front.
Thank you very much. So time is up. Tom, thank you so much for joining us today from London. Terrain, it's been a pleasure. And thank you, the audience and the Singapore FinTech Festival, for hosting us. I hope you guys learn something, take some takeaways from here. Yeah, thank you, and I wish you a nice afternoon.
Thank you.
Thank you very much.
There is a poll if you want to give some feedback. So it's been automatically, I think, on your screens. We don't have the right to vote, but the audience can.
Thank you.